Thinking about buying a home from a family member or maybe selling to your child and wondering, can you gift the equity to make the deal happen? Good news, you absolutely can, and it's called a gift of equity. But not every loan type handles it the same way. So today I'm breaking down who can give a gift of equity, which mortgage program allows it, and the rules you must follow to keep everything legit and avoid any last minute surprises at closing. Let's get into it. First things first, what exactly is a gift of equity? So a gift of equity happens when a seller, usually a family member, gives a portion of the home's value to the buyer as part of the purchase. So instead of handing over cash, the seller agrees to gift part of the build-up equity in the home, reducing the buyer's down payment or even covering it entirely. So no cash needs to change hands. The buyer still gets instant home ownership, and often the buyer doesn't need as much out-of-pocket cash to close. But here's the catch. Each loan type has its own rules about who can give the gift and how it has to be documented. Now let's tackle the big question. Who's allowed to give a gift of equity? Spoiler, it usually needs to be someone related to you, either by blood, marriage, or legal ties. But there are some important differences depending on the loan program. So Fannie Mae, Freddie Mac, FHA, VA, and USDA all have their own rules. So let's break down each loan type. Starting with Fannie Mae. So acceptable donors are a relative, so meaning your spouse, child, parent, grandparent, or anyone else related by blood, marriage, adoption, or legal guardianship. A trust or estate of a related person. A non-relative who shares a familial relationship, like a domestic partner, fiance, former relative, or even a godparent. So important, the donor is not considered an interested party if they meet the eligible donor requirements. You can only use a gift of equity for primary residences and second homes, not for investment properties. And you must have a signed gift letter confirming the amount of equity being gifted and that no repayment is expected. Now there's a special rule for multi-unit homes. So if you're buying a 2 to 4 unit primary home or second home and your loan to value ratio is above 80%, you must contribute at least 5% of your own funds towards the purchase. Now let's talk about Freddie Mac. So acceptable donors for them is a related person. Again, this includes your spouse, child, or anyone related by blood, marriage, adoption, or legal guardianship, fiancés or domestic partners. And then a special note here, wedding gifts from unrelated persons are also acceptable, but that's more for traditional gifts, not gifts of equity. So it's the same as Fannie Mae. So this applies only to primary residences and second homes. A signed gift letter is required, and if you're buying a 2 to 4 unit property with more than an 80% loan to value, 5% of the funds must come out of your own pocket. FHA has slightly different rules for who counts as a family member, and it's a bit more flexible. So acceptable donors for FHA include a child, parent, or grandparent, including step relations and foster relations. So a spouse or domestic partner, legally adopted son or daughter, foster child, siblings and step siblings, aunts and uncles, in-laws, including son-in-law, daughter-in-law, father-in-law, mother-in-law, and siblings-in-law. So the FHA rules are that a gift of equity is limited to an 85% loan to value unless the borrower is purchasing the principal residence of the family member, or the borrower has been renting the home from the family member for at least 6 months before signing the sales contract. So you're also going to need a signed gift letter, and the transaction must be fully documented to show that it's a real family gift and not an inducement. Moving on to VA loans now. So the acceptable donor for VA loans is pretty broad. So anyone who is not affiliated with the builder, developer, real estate agent, or any interested party to the transaction. So a special note here is that gifts of equity could be considered part of the seller concessions, and VA limits total seller concessions to 4% of the home's value. So if it looks like the gift is pushing that limit, it could be treated as an inducement to purchase, which might affect the loan approval. So pro tip here, always double check how your lender is calculating seller concessions if you're using a gift of equity on a VA loan. And finally, USDA loans. So the acceptable donors are anyone who does not have an interest in the sale of the property, meaning not the seller, builder, or real estate agent. So there are some requirements still. So a signed gift letter is required, documenting that repayment is not expected. So gifts from interested parties, so the people who benefit from the sale, are generally not allowed under USDA. And remember, since USDA loans are primarily for rural and low-income buyers, your lender will need to verify that the gift doesn't violate the program rules. No matter which loan program you're using, the gift letter is crucial. It should include the donor's name, address, and relationship to the borrower, the dollar amount or estimated equity being gifted, a statement that no repayment is expected, signatures from both the donor and the borrower, and sometimes additional proof is required, like a sales contract addendum that shows the agreed upon sales price and gift of equity. So without a complete gift letter, your loan could be delayed or even denied. And the good news is your lender should be providing you a gift letter template so that you don't have to come up with this on your own. You might wonder, why do lenders make such a big deal about gifts of equity? And it's two main reasons. One, they need to make sure you're not being pressured into the sale by someone trying to offload a property. And two, they want to ensure the property is being sold at fair market value and that you're financially prepared for homeownership. So you're not being handed a bad deal. That's why documentation and clear relationships between donor and buyer are critical. Here are some common mistakes to avoid when using a gift of equity. Forgetting to get a proper gift letter. Assuming anyone can give you equity, so some programs have very strict relationship rules. Not disclosing the gift upfront to your lender. Exceeding the seller concession limit, especially with VA loans. Thinking a gift of equity means no closing cost. You'll still need to pay for things like title insurance, taxes, and other fees. So make sure to work closely with your lender from the start to make sure everything goes smoothly. If you're ready to move forward with a gift of equity, here's what you should do next. Confirm that you and the donor meet the relationship guidelines for your loan type. Get a current appraisal to establish fair market value. Work with your lender to prepare a gift letter and all supporting documents. Make sure the purchase contract clearly reflects the sales price and any equity being gifted. And then stay in communication with your lender and escrow team to avoid any last-minute surprises. Thinking about using a gift of equity to help a loved one or to make homeownership more affordable for yourself? I'd love to walk you through the process, so book a call with me today and I'll help you confirm donor eligibility, prepare the gift letter correctly, and set up your financing for success. And if you found this helpful, be sure to hit that subscribe button for more home buying tips, mortgage strategies, and real estate insights. Click the link below, schedule a quick chat, and let's get you moving toward homeownership with the power of a gift of equity.